Okay, well, hello, and thanks for sticking around. I think this is the last corporate presentation for today, so I assume you've been waiting all day for this one, so thanks very much. Thanks to RIU for the opportunity to present today and for the introduction, Chrissy. Thanks very much. So, my name is Brendan Stats. I'm the CEO of TMK Energy, and as mentioned, TMK is focused on developing our world-class coal seam gas project in the South Gobi Basin of Mongolia. So I've got a lot of slides today to get through, and I've got to get through them quickly before Chrissy kicks me off. But I just wanted to start on this one, talking about the highlights of the project. And I guess the question is, why are we in Mongolia, and why are we looking for coal seam gas in Mongolia? And I think the answer really is because of the potential for Mongolian coal seam gas, and specifically referencing the size, the quality, and the location of this project. And so in terms of size, what I'm talking about is both geographically, it's 8,500 square kilometres, so a very large area geographically, but more importantly, the size of the resource, or the size of the prize. So we have a total 2C plus 2U of 6.5 trillion cubic feet of gas, and so it's a giant resource. And I think really when you're chasing multi-TCF scale projects of this size and prospectivity, they're difficult to find, but Mongolia really presents this opportunity. Secondly, in terms of the quality of the project, so Mongolia is well known for large coal deposits, which are mined in the South Gobi region and large exporter of coal to China. And what we really see is Mongolia today is really analogous to Queensland 20 years ago, where Queensland had a long history of coal mining, a lot of exploration, well-developed coal mining, and they really started looking at in detail, the coal seam gas potential of Queensland, say, circa 20 years ago. And within that 20 years, Queensland coal seam gas has really developed, and today is tens of billions of dollars worth of coal seam gas going out of Queensland. And so we're right at the start of the journey in Mongolia, but I think encouragingly what we're seeing in Mongolian coals is that some of the key attributes required for coal seam gas are equal to or better than the coals that we have in Queensland. And so that's very good. And then the last point really is the location. So the location of the project is right on the border with China. You can literally see China from the project area, close to gas infrastructure in northern China. And so China's the largest energy importer in the world, and so being located so close to the market gives us a real advantage in terms of cost of delivery. Coal seam gas from Queensland ends up in China, but that's very high cost of delivery, and even the other importers of energy or gas into China are from pipelines several thousand kilometres away. So there's a real advantage there. But there's also a real energy demand for cleaner energy and reliable energy in Mongolia itself. And so there's we're fortunately really strategically well located close to existing markets. So just onto a couple of the investment highlights, and I'll try and talk to some of these points through the presentation in more detail, if I have time. But the first one, we've got the largest gas for a 2C contingent resource in Mongolia, so it's a great place to start. I mentioned we're close to large markets in China, and there's markets in the South Gobi with the mining operations. The South Gobi region in Mongolia is the premier mining jurisdiction there. A lot of high energy users located in the South Gobi. I'll just point to the existing data set we have of 2,500 drill holes from a lot of the work that's been done over the last 20 years in the coal exploration and mining. And what that means for us is that we've significantly de-risked the project. We understand the geology very well through this data set, and it's a real head start. 2,500 drill holes probably cost you about $250 million to drill, and so it's a $250 million data set, but more importantly, it saves you a lot of time, and that's why we've been able to move the project forward very successfully and very quickly. What else should I focus on here? The initial data that we've collected really points to a world-class coal seam gas project. And I guess just where we're at today, we've got a very active next 6 months where we're hoping to take the project through some key development milestones. So it's a very exciting time for the company. We're well funded through that work program, and I think our track record points to the ability of TMK to actually deliver on our goals. And so it's an exciting time for the company. I won't go into too much detail on the corporate snapshot, but what you can see is that we're well funded, $6.5 million in the bank as of the last quarter, which will I should point out that exploration costs in Mongolia are very, very low. So that money goes a long way in terms of taking the project forward. Market cap there around 65 to 70 million. And just on our register, about board and management have about 50% of the shares on issue, so significant skin in the game from the board and management. And the other one is significant Mongolian ownership of the shares. About 50% of the shares are held by Mongolians. So I think that points to that we've got a really strong interest, a local interest in the project, and also endorsement of the project. Just quickly on the management and the board, we've both Australians and Mongolians on the board and the management team, which I think is important when you're developing a project in Mongolia. And we've actually got a few of the directors here in the crowd today, and including Gemma, who's come from Mongolia. So if you haven't caught up with, and John Warburton's over there, so if you haven't caught up with them, it's a great opportunity to ask those guys some questions if there's more information about TMK or the project or Mongolia in general. Those guys, I'd encourage you to catch up with those guys, and they've probably got a different perspective to me, so great chance to catch up with them. Regarding myself, I'm a geologist. I've worked on and off in Mongolia for the last 12 years, and my expertise is really in coal and coal seam gas. And I've been involved in this project since its inception. Now, I don't want to blow my own trumpet here, but I just wanted to point out that we have been able to move the project forward very quickly and very successfully over the last 18 months. So TMK acquired the project about 18 months ago, and since then we've drilled the first exploration program very quickly and very successfully. We've got a maiden contingent resource of 1.2 TCF, and more recently we've drilled 3 production wells as a pilot well program and brought those wells online a couple of months ago. And we're now flowing gas to surface and flaring. So it's been a very successful last 18 months. And I think what that points to is, one, it points to the quality of the project. The ability to move the project forward is obviously thanks to the geology. It all comes down to the geology in the end, but also the team. TMK's been able to take the project forward very successfully. So this is a summary of the exploration results that we obtained last year from the maiden exploration program. And yeah, I'm a geologist, and so I've got to be careful not to go into too much detail and rabbit on and waste my 15 minutes. But this really is the crux of the project, is in the geology. And Mongolian coal geology is quite unique in a number of ways. But importantly for us, the special characteristics are really that the coal seams there are very, very thick, much thicker than coal seams in Australia, but also very gassy. So yeah, very, very unique and obviously very good for coal seam gas. And what that means is that there's a lot of gas in the ground, and that's what the exploration program last year demonstrated, and what the maiden contingent resource demonstrated. So just onto that maiden contingent resource that was delivered last year on the back of that exploration program. 1.2 TCF, the largest 2C in Mongolia. But I'll just try and put that into perspective. 1.2 TCF is at $10 a gigajoule is about $13 billion worth of gas. If produced at 50 petajoules a year, that's a 25-year production at 50 petajoules. So I guess my point is it's a big number. And that contingent resource number is delivered from a very modest exploration program last year, and from an area of less than 1% of the total project area. So yeah, enormous resource. As I said, a lot of gas in the ground, but there's plenty of upside and exploration potential within the remaining 8,500 square kilometres. And I guess this chart's just trying to illustrate really what I mean by a lot of gas in the ground. And the chart on the left is comparing the energy per unit area, or per square kilometre. And what we've got is we've got 3 well-known CSG fields from around the world: the Powder River Basin, the Surat in the US, the Surat and Bowen Basins in Australia, and they typically operate at 4 to 6 BCF per square kilometre. These are very successful coal seam gas basins, and what we've got up in the top right there is the Gavantes project running at 33 BCF per square kilometre. So that talks to a very, very high energy density or resource density, and that's purely a function of that unique geology that I mentioned, the very, very thick coals and very, very gassy coals. And looking forward, what that points to is simple, low-cost development and high operating margins. So onto the plan for this year. So we've got 3 key aspects of the plan this year. The first one's being the pilot well program, which The key aim is to flow gas to surface and at commercial rates, and I'll go into more detail in a minute. The second is an exploration program, which we've just recently kicked off. And the third aspect is early commercialisation. So I mentioned there's existing high energy users in the South Gobi, and we've already got an offtake agreement for any gas we produce from this pilot well program to supply the local mines with energy, which they're desperate for. But I think the key one really is the pilot well program. I think we've demonstrated that there's a lot of gas in the ground, and now the question is, can we get the gas out and at what rates? And that talks to the commerciality of the project. And so we successfully drilled the 3 production wells in May and June this year. And by successfully, I mean they intersected about 60 to 70 metres of coal in the production interval. And I should point out these are relatively shallow for coal seam gas, between 300 and 500 metres. And they're also simple vertical wells, which in another word means cheap wells. So we recently turned those on. About 8 weeks ago we started pumping, and typically with coal seam gas projects, what you expect is high water rates to begin with, and then over time the gas rates will build up. And we expect the gas rates to build up over approximately 18 to 24 months as the water rates drop off. But what we've seen so far in the 8 weeks that we've been operating these wells is all the positive signs that we're looking for. What we've seen is good water rates. So we've been pumping, we're up around 600 to 650 barrels of water per day. And what that indicates is good permeability, which also talks to future good gas production. So that's good water rate. But I guess critical to coal seam gas is the ability to dewater the reservoir or depressurise the reservoir to get the gas to flow. And so what we're seeing also is we're able to successfully bring down that reservoir pressure. So that's what we're seeing at the moment. And then the third positive indication is we've got gas to surface. On all the 3 wells, we've got flowing gas to surface and a flare. You can see the flare there, and there's a flare on each of the 3 wells, and continuously flaring from the 3 wells. And the gas rates are low at the moment, but right. But that's what we expect to build up over the 18 months. But so I think we've got a very exciting 6 months ahead of us with the production testing from these pilot wells as we see those rates build. I'll have to speed up a bit, I think. But the exploration program we kicked off two weeks ago. The dark blue box is where we did the exploration last year, and we've got the pilot wells going now. The lighter blue box is where we're drilling now, and I guess the key point there is it's 100 kilometres away. It's in the same coal measure rocks, and between those 2 boxes there's well-defined coal fields. And what we really hope to demonstrate is the scale of the project. I've already briefly mentioned that there's significant opportunities for gas in Mongolia, and we see gas playing a very important role in the transition and growth of the Mongolian energy market, addressing some of the really big concerns there around energy independence, security and reliability. So I think there's a great market for gas in Mongolia. I think the energy thematic in China is well understood, huge appetite for energy and a particular appetite for gas, and so we're well located to, well exposed to that market. Just quickly on Mongolia in general, I'm not sure how many have been to Mongolia, but I think it's a great place to work, and their economy is really underpinned by their resource industry, and there's a lot of support from the top down to get these resource projects off the ground and developed. You heard from Colby yesterday for Talon. They're our partner, 33% interest in the project, been involved in the project for a number of years, and we're also we've got an exploration licence and a production sharing contract with Mongolian government, which really sets the fiscal terms for the exploration, also the development of the project. And in summary, I think they're very competitive with other jurisdictions around the world. So I guess I just wanted to wrap up, and in terms of an investment opportunity, I think we've got a world-class project there in Mongolia. And over the next 3-6 months or even a year, I think we're going to go a long way to proving up the potential of the project and take it through some real key development milestones. And probably the most important one at this point is really the commercial gas rates to surface, which is what we hope to see in the next 6 months. We've got the exploration program to demonstrate scale, and we're fully funded through these work programs. So thanks very much for your time today. And I guess if you're interested, we'll be around, and as always, anytime, reach out if there's any more questions. So thanks very much.